Welcome to Fuller Speed Ahead. I'm Craig Fuller here with JT Engstrom. So, JT, otherwise known as John, or formerly known as John.
Correct. Yeah,
Gotta
good
ask,
afternoon.
why the name change?
Well, moved to Chattanooga 3 weeks ago. Really excited to join the team. There's a lot of excitement on this floor, and currently we employ about 150 people. And the thought process was, well, we're going to be doubling pretty rapidly. And John being such a generic name, there's going to be 20 or 30 Johns on the floor. And as you know as well as anyone, my last team, which was a two-man roster, had 2 Johns out of 2 people on the team.
You had John Larkin and John Engstrom, and now there is one JT.
There's one JT at FreightWaves.
Is there one JT in the industry? Is there another JT? No.
There's one that comes to mind.
Okay.
Myself.
You're not proud of this fact, are you?
But I'm sure there's multiple others if I really thought hard about it.
There's only one JT, Engstrom.
That's correct.
So JT, you are the Chief Strategy Officer. You came in a few weeks ago, but you and I have known each other for at least over 2 years, almost 3 years at this point.
That's right.
So it's been interesting to know you over the years. You were when I first met you, you were on John Larkin's team, you were an equity research analyst for Stifel. Then you transitioned along with John Larkin to the investment banking side. So you've seen all sides of it. You also were at a consulting firm before that.
That's right. I was on the transportation and logistics management consulting firm team at Oliver Wyman for 3 years prior to joining Stifel.
And they're big industrial infrastructure consulting, or?
They do a lot of strategy work with some of the largest players in the space. They typically work with operating companies that are, sort of market cap, whether private or public, hybrid market cap of, call it $50 billion plus.
Yeah, so tend to get into big infrastructure companies, airlines fit that, the big parcel companies, the railroads. There's not a lot of trucking companies there's no trucking company I know of that's at 50 billion.
So there's a handful of trucking companies that they've worked with in the past, and I worked on a handful of them, and a few of them actually. But for that type of service, for the high caliber of strategic work that they do, there usually has to be a very unique or special situation for them to come in and really be able to drive a lot of value really quickly, which frequently opens that opportunity in the trucking space, given the cycle, given the operating leverage, given some of the challenges that occur.
But then you got a CFA, you moved into investment research, equity, stock analyst research on Larkin's team. And it could be said that Larkin probably had the deepest Rolodex in the industry as an analyst. You now have inherited that Rolodex and in many ways have gone out and expanded that pie.
Yeah. John Larkin is a phenomenal mentor. He's a really good friend of mine, and we still stay in touch daily to this day. It would be unfair to only attribute that research platform to John. He did originate and build it from the ground up. On that team are a lot of very skilled and talented individuals. Dave Ross and Bruce Chan certainly coming to mind. Shout out to Mike Bowdendistel, who's going to be joining us very soon.
He is going to be a part of the FreightWaves team.
That's right. We're very excited to have Mike with us. In my mind, he's one of the, if not the best equipment and railroad analysts in the United States, if not North America. Dave and Bruce are also super talented. And the lineage of that team, whether it be the Alex Brown investment banking team, the Legg Mason investment banking team, the Legg Mason research team, the Stifel research team, there's a lot of really interesting names in that alumni network. And it's funny, I just got off the phone with Andy Clark, who you know very well through.
I have a tortured history with Andy.
Dealings in the past.
Hopefully Andy will watch this and recall the my darker days. Their days, I'm sure they had a lot of fun of the Express Global, U.S. Express, Ford Air debacle.
Yeah, he's a really sharp guy. John Hardig had previously been on the platform. Obviously, he was the CFO at XPO for a while. John's super sharp. Brian Green is still out running the investment banking practice. There's a lot of really talented people that have gone through that organization, and same is true for the Oliver Wyman team. They have a phenomenal team still working there, delivering really high quality client service. And a lot of their alumni are also in the space as well. I spoke with Adrienne Bailey 2 days ago. She just rejoined the firm. Guys like Tom Sanderson, who George Abernathy worked with. George obviously is our president here now, who I report to. Worked with Tom Sanderson for 12 years plus, if not longer. I don't know the full count. And so
I mean, you think about equity research. When I grew up, my father was at US Press, took it public. He would get all these research analyst reports from the analysts. And that's where he actually found out what was happening in the market. That was really the only source of finding market commentary focused in transportation. But over the last decade, and particularly the last 5 years, that entire research world has changed. A lot of banks have laid off their equity research analysts, and there's really few that are left on the sell side. I'm wondering, where do you see that headed? Why is that happening, and what does that mean for this industry?
Yeah, that's a great question. And there's a few things layered within that. There's a lot of secular changes going on in the investment banking industry. And for us, we traditionally focus on transportation and logistics. So I'm going to frame the question within that market.
You're talking about FreightWaves or when you were at Stifel?
Craig and JT, if you will. And I say that because the actual capital structure of the public companies that you can generate sales and trading revenue off of play into the answer to this question. Because research departments currently, based on current regulation, should be generating revenues off of research they produce. Now, that current state is an evolution from, where revenues were allowed to come from many, many years ago. Prior to the global settlement, research analysts could pitch on investment banking deals. And they could also directly be compensated for deriving alpha in the equity markets, whether they had, material, non-public information or not. Again, we're talking many years ago, and I would never partook in this, but many, many years ago, there was no such thing as, Reg FD, full disclosure, where if you knew something, you had to publish it and make sure it was public knowledge before you could even talk about it. So that industry has really evolved a lot over the last 10, 20, 30, 40 years. And some of that is the influence of technology and information flows coming much quicker versus imagine, picking up the phone and call your stockbroker on the trading floor, the literal trading floor. The industry continues to evolve, and I think as these dynamic changes continue to evolve that space, it changes, one, their revenue mechanisms, two, what they're able to deliver in terms of service to the market, and three, how that actually gets valued in the market. And it creates a lot of pressures for equity research, broadly speaking, in transportation and logistics. If you want to generate high volume, sales and trading revenue, what are your real plays? I mean, the trucking stocks for the most part are illiquid. The railroads are relatively liquid, but a lot of them are owned by large index funds or mutual funds. And a lot of those index and mutual funds are trading off of algorithms as opposed to using market makers as much as they had in previous lives, at least.
Yeah, and then the retail trading, which, there are some folks that trade retail even in trucking because it moves a lot and people that are in the industry know it. That's pretty much gone away because a lot of it's into no fee or very small fee commissions, and so the banks have had to think differently about it.
It creates a great opportunity for us here at FreightWaves to be the predominant de facto proprietary research, differentiated insight, generating platform for what historically would have been able to been provided by the equity research or credit research departments that now they economically can't even serve. So it's a clear, obvious pick for us to be looking at trucking. We're going to be looking at everything transportation, but if there's no competitive landscape, it's easy for us to have a pretty solid niche, and all of transportation and logistics will be our niche, if not already.
So JT, you had the opportunity to go anywhere. I mean, you have a fantastic resume. You know a lot of people. You got an amazing Rolodex. You could have gone anywhere, but you ended up in Chattanooga, Tennessee, here at FreightWaves. I'm wondering, why did you make that move?
Yeah, it's a great question, Craig. For one, I have really appreciated our friendship that we've developed, our professional and personal friendship over the past 3 years. And I really believe in the vision of the company, which is why I served as a board of advisor member for 2 to 3
You
years.
weren't allowed to do long because
When I was allowed to do it, yeah, I was conflicted for the past year or so.
Another thing about working for a bank is there's a lot of compliance. So you were not allowed to do. I don't think we ever actually had you officially indoctrinated. So
I think it was for about a year. I could be wrong.
You were involved, but I don't know that. But yes,
there's a lot of opportunity here for us to continue to grow and serve the industry and develop a differentiated product that is not currently in the industry. And furthermore, build on top of that to actually introduce this concept of transparency in freight markets. And
you say differentiated, you're talking about thought leadership, you're talking about data, you're talking about analytics, you're talking about information, informed information with a lot of context.
That's right. A lot of context, a lot of analytics, a lot of data, and a comprehensive view, or an attempt at getting a comprehensive view on the market to understand not just where it was, where it is, but where it may be going.
So you think about the next 5 years. You came here for a mid-turn, if not longer. What is it you hope that we become and we evolve to over the next 5 years?
Continue to be the preeminent global market intelligence platform for the transportation and logistics industry, and then therefore, really, once you can encapsulate all of that, it's a huge indicator on the entire economy.
Without a doubt. I mean, just the transportation logistics industry itself is $9.6 trillion.
That's right.
And it's completely underserved by market data businesses and market analytics businesses. And freight's going through a lot of changes. I mean, some of the stuff that you've talked about.
I mean, even before getting into that, to touch on that, a lot of economic indicators that are utilized today talk about the Dow theory. Mm-hmm. Right, which everybody likes to use on Wall Street.
And they incorporate the transports.
The transports of the top Dow companies. So we're measuring economic impact off of Union Pacific and American Airlines.
Yeah,
and
UPS maybe is in this.
And UPS is probably in there, which is great. Phenomenal companies.
All of those are great, but they're very steady, massive market cap companies that represent a small, on a global scale, a rounding error in the global transportation.
Large market cap, small overall impact in terms of total freight, whether dollar or tonnage amount.
Yeah, you know what's amazing to me? It is an astounding fact. If you there's one company that sees the largest percent of freight, and it's not a transportation provider, it's a warehouse company. So Prologis, the volumes that move through the warehouses would make them, if they were a transportation provider, the largest globally of the amount of freight that moved through their system. If you look at UPS, FedEx, the U.S. Postal Service, Deutsche Post, they still are a single-digit market share of total freight transportation movement on the global pie.
It's an amazing, when you think about, and the article I wrote, which will be published with this video.
It is published, attached. You can click right here and get it.
Everybody should read through it. I've put a lot of thought into it. It's titled 10 Lessons from 10 Years on the Road. And a lot of it touches into the notion of how does the invisible hand of the trucking market truly impact overall transportation, which in and of itself is the true indicator of economic activity in the U.S. and really the majority of the world, because trucking is so paramount to everything consumer. And, for hire plus private fleet represents somewhere between 2/3 to 3/4 of all surface transportation in the United States of America. To neglect that simply because we don't know how to talk to every owner operator in the United States.
It's very fragmented too.
It's incredibly fragmented.
You talk about the fact that it is an enormously fragmented market. Even the largest 10 carriers represent something like 12% market share of the entire over-the-road for-hire market. It's just so fragmented, and companies just don't have enough data, even in their own data sets, to know what's happening. So it's important. But transportation is going through this massive upheaval. There's a lot of new entrants in the market. There's a lot of even big technology companies that are attempting to gobble up the transportation marketplace. I'm curious, what do you see happening? What does this all mean?
In terms of mergers and acquisitions?
Just in terms of think about Amazon coming into it and Uber Freight coming into it, and C.H. Robinson reportedly going to spend $1 billion over the next 5 years. I mean, we're talking about, J.B. Hunt has reportedly built and arguably built the largest digital freight platform in North America. And I'm curious, what does this all mean when technology sort of enters the market? it starts to change everything, and people have to think differently about freight. Where do you see this headed?
I think there will be a continuous evolution in transportation, certainly on the back of technology, largely on the back of digitization within that technology, right? So equipment technology is one thing, whether you're trying to improve miles per gallon or fuel efficiency or aerodynamics or whatever it might be. But the actual digitization enables a lot of very rich analytics to be put onto the data. It creates the data for which we can do analytics, actually is more accurate to say. And at one point in time, when we're able to actually measure, have enough data to actually measure a larger portion of what's going on, we can re-optimize the entire domestic supply chain, which is a universal or a global macro collection of all sub-supply chains, whether it be for an individual consumer retailer company or one managed by a third-party logistics operating company. And so the more data we have, the more we can measure, the more we can do math, the more we can re-optimize. And so what's considered optimization today, in reality, in 10 years, will be dynamically sub-optimized in relation to the amount of information and data that we have in the future. Mm-hmm. And so as a result, for the analytically oriented individual, these supply chains will continue to evolve. And as a result, all of the transportation providers around that will continue to get their piece of the piece of the pie and figure out how to posture themselves.
Yeah, I mean, you've been at the intersection of both technology and innovation, because you and I have, our paths have been quite similar in very different verticals. You've been on the public side as a research analyst and investment banker, talking to the C-suite of almost every major transportation company. We've been more on the tech sort of startup and blending the market side, but you and I have had these common conversations and have seen the world in a very similar fashion, but also in very different specters of it. I'm curious, as we think about the worlds of technology and innovation and markets coming together, who of the types of players, who do you think wins?
I think the winners are those who can be dynamic. Those who could be thoughtful, those who could be proactive, those who could be analytical in their approach. I think that's really the way to think about it. It's not a question of, do you have the assets, do you not have the assets? Are you trucking, are you logistics, are you maritime? It's just who's really very dynamic. If you look at transportation over the last 250 years, even just in the United States of America, you see that the logos continuously evolve. Mm-hmm. Which is really unique. And if you think of the railroad industry being one of the longest living in the U.S., what's amazing and fascinating is that despite how old and culturally rich the industry is, it's really only since the Staggers Act 30-ish years ago that the industry actually consolidated.
Yeah, for sure.
And so that's actually kind of a relatively new trend within the broader spectrum of the history of the industry, that there's these 6 or 7 big players in North America, however you want to define it, less than 12, which is pretty unique, because as of 1980, there were over 100, quote unquote, major players in the space. And
yeah, and I think about, I think Transport Topics had the top 100, and back in 10 years ago or something, maybe even a little bit later, went and tracked all the ones that were still around. We're in the less than 10. It may even be less than 5 now. If you look at the companies that are still around, I mean, companies like New England Motor Freight made the top 100, no longer are around, even this year. So it's an interesting time. It's an exciting time in transportation. And certainly if you like technology and innovation. Now you're going to be at the American Truckers Association, the ATA conference coming up in San Diego, October 6th?
I think it's October 7th and 8th.
Okay, so you're going to be there. So folks that are there that want to connect with you, that are either that have known you in your past life, or perhaps want to meet you and get your perspectives on the intersection of markets and technology and future innovation, should certainly connect with you.
Absolutely, they should all reach out. I'm available and excited to meet with everyone possible. I'll be posted up there from midday Sunday until midday Wednesday, I think. And
this video will be embedded with an article link that you could find out JT's thoughts on where the industry's headed. And you'll be at FreightWaves Live, where we're going to dive into the intersection of markets and technology. It is really the best place to immerse yourself in what's happening in freight transportation. It's on November 12th and 13th in Chicago, Illinois, at the McCormick Center. If you haven't got tickets, do so as soon as possible. Prices go up at the end of the month. And we're excited about what's happening. We're certainly excited where things are headed. JT, thanks for coming on, and we will see you guys back soon.